Hey, it's Scott Garlis at Stansberry Research. I'm here at the 2019 Alliance Conference in Las Vegas. I'm here with Ken Lewis, CEO of APMEX. Ken? Thanks for being here.
Appreciate it.
Certainly. So during your presentation, you presented pretty compelling arguments to prove that owning gold rather than cash long-term has advantages. What strategies should investors consider when making gold investments?
You know, look, I think the big thing is your portfolio and evaluating kind of how's it all formed, if you will. How do you look at risk? One of the things that's common when people look at their portfolios is you kind of look at, based upon where you're at in your cycle, how much risk you're willing to take. In my view, gold should be more on the safe haven conservative side of the investment portfolio. I know me personally, I'm running about a 70-30 split, 70% equities, aggressive growth, 30% more on the conservative side. I allow gold to take up 5 to 10% of my 30. That's just how I operate. So I think it's really about where you're at and your level of risk you're willing to take, and gold should represent more on the conservative side of your portfolio.
And what are the advantages to owning gold in ETF form?
You know, look, I try to make a compelling argument that I think digital can replace ETF in many ways for various reasons. But the reality of it is ETFs are very easy to operate in. You get your brokerage account, you're linked with it, you've already done the process of funding it, you can move your investments around between other investments and things like GLD or FIZ or others. So in that regard, from a convenience standpoint, it's hard to beat. Obviously, you got to figure out how to factor in those fees, and when you're dealing with fees and ETFs, they kind of come one and the same. But in terms of convenience and ease of use, you really can't go wrong. I would probably focus on larger ETFs and making sure you're protected from a counterparty standpoint, because I do think there's some concerns out there about what happens if a bank were to struggle or the financial systems were to struggle. How am I protected on my ETFs? It's something you'd want to factor into your equation.
So you'd want to make sure you're investing in an ETF that owns physical gold versus somebody that does not?
It'd be my opinion would be yes. Sprott, as an example, our partner on One Gold, has their product held at the Royal Canadian Mint, and you can feel confident that it's there. Matter of fact, I was just talking to their president and CEO recently. They built a vault at the Royal Canadian Mint in Winnipeg just to hold their metal.
Wow. You
can feel confident it's there, where I think there's some others where there'd be some serious question marks.
Yeah, that's fair. And then when it comes to physical gold, what options does a buyer have, and what purpose does each serve?
You know, I think there's a spectrum. You have the collectible side, where people tend to look at premium appreciation, kind of high dollar coins, where the value of that coin is not driven by the metal. It's more based on its rarity, if you will. I think that does work for certain people. What I would always coach people is to be careful and do your research. Don't take the first price you ever see. Go out and kind of research it and go to the CE and understand that. Then you get into things like coins, sovereign coins, and then into bar form. Bar forms seem to be much less expensive for you to get into, but when you go to sell it, you're going to find that also you're not getting paid quite the premium you might have liked. So I tend to focus on spreads, which is the bid-ask spread of when I go to buy it and then I go to sell it, what's that spread running? Personal opinion, sovereign coins are the way to go, gold eagles, gold maples, silver, just because they tend to always be in demand when you go to sell them. Where in bar form, depending on how saturated the market can be, you may find a wider spread.
It's really interesting. And then what questions would someone ask before buying gold in any form?
You know, my biggest thing is know who you're doing business with. I think you have to really go out and research that company, make sure they do what they say they're going to do, make sure they've been in business, make sure ideally they've got great reviews from the customers. So first and foremost, it's know who you're doing business with. And then from there, decide how much exposure you want to have in metal. And how do you want to hold it? Do you want to hold it in physical at home? Do you want to hold it in physical storage? Is digital an option or ETFs an option? But really try to do the research on the pros and cons. Hopefully my presentation today will help people think about how to ask those right questions and get the right answers. That was our objective. And again, I just say do your research.
And then what type of investor should be buying gold?
All. I mean, as the quick and dirty is, no matter your age, you should own gold. I got a daughter, 17. I've got twin boys who are 22 years old, and they own gold. I think it's one of those things where the amount they hold obviously is not going to be the level that maybe someone like myself is going to be holding, but having it as a portfolio diversification strategy I think is important. You know, look, at 22 years old, you should be thinking about compounding interest. You should be about growing your overall investments. You should always have a certain percentage always sitting there as a safe haven investment, even at that young age. But clearly, as you get into wealth preservation mode, you need to be thinking long and hard about how much more gold to hold, or silver, by the way. We haven't really talked much about silver, but the reality, in my personal opinion, is I think silver has more upside than downside. and it's a viable option as well for investment.
Yeah, you're never too young to be prepared.
Yeah, no doubt, no doubt.
Thank you very much for your time, sir.
Thank you, sir.
Enjoyed it.